Dear viewers, a few months ago, 5.9 million tons of lithium resources were found in Jammu and Kashmir. As per the Union Minister, Mr. Nitin Gadkari, it could make India number one auto manufacturer in the EV segment. Now, frankly, I'm not sure of that. You see, there is many a slip between the cup and the lip. Little is known about these reserves and if these can be mined in a viable way. So, that's not the reason why I will bet on an EV revolution. But I'm optimistic about the rise of EV adoption in India. You see, the electrification of vehicles is not just a narrative anymore, but a mega trend that has taken over in the country. The major trigger has been a decline in the battery cost. And then we have policy tailwinds, PLI schemes, carbon commitments, and subsidies, and investment in EVs by corporates as well. It's like little pieces are coming together to make this vision a reality, especially in the two-wheeler segment. And then there is data backing it. Overall, EV sales in FY23 were up 58%. Of the total EV sales in FY23, electric two-wheelers and three-wheelers accounted for 62% and 34% respectively. Now, India is a unique country in the sense that two-wheelers comprise over 80% of the auto volumes. If we look at our closest neighbor China, 80% of the two-wheeler fleet is electrified. With subsidized cost of ownership, comparable performance, and conducive charging options, as two-wheelers can be charged at home at minimal cost, the EV transition in the two-wheeler space is on an accelerator. Here is how I would visualize the size of this opportunity. In FY23, two-wheeler sales in India were 15.8 million units. Now, auto is a cyclical sector, so let us consider a moderate 5% growth for the next 10 years. At this rate, we are looking at two-wheeler sales of 22 million units per year by 2030. Now, due to all the reasons mentioned above, one-third of these could be electric vehicles, which amounts to 7.3 million electric two-wheelers per year. In FY23, the two-wheeler EV sales volumes stood at 0.7 million. Now, that's a 10x opportunity for this decade. Early investors in this opportunity are in for a big wealth creation journey. If you have been following me, you would know that I am not too keen on EV OEMs for whom adoption of EV is more of a compulsion and a potential cannibalization threat for the existing engine-based vehicles. I am more interested in the pick and shovel place that is the EV ecosystem. A few months ago, I shared with you the names of some of the lesser known pick and shovel chemical plays that could gain from EVs. You could watch it using the video link in the description section. In today's video, I am going to focus on a specific segment of the EV ecosystem, that is, the EV batteries and the companies that could be potential beneficiaries. So moving on to these stocks. The first is Gravita India. It's a leading lead producer in India and the largest battery recycling company in India. It works with players such as Amara Raja, Exide, Tata Batteries, Panasonic, HBL Power Systems, and so on. 89% of the company's revenue come from lead-based products and the rest from aluminium, plastic, and turnkey projects. The company has recycling facilities in India and abroad. Share of value-added products in FY22 is 42% and exports accounted for 51% of its revenue. The company has a hedging mechanism in place since June 2019, wherein it hedges the core inventory using forward contract on LME exchange along with back-to-back hedging that offers comfort with regards to commodity price fluctuation risk. A deep-rooted global procurement network that allows it to procure material cheaper along with the established and diversified client base offers this company entry barriers. The business is witnessing tailwinds with extended producer responsibility or EPR for battery makers, battery waste management rules coming up in 2022, and scrappage policy in effect. With GST in place, the share of formal players like Gravita in lead recycling industry is up from 20% in FY16 to 35% in FY23, and this share for formal players is expected to improve to 75% by FY26. The capacity of the company is expected to grow by 69% by FY26. The planned capex is 650 to 700 crore, which will mainly be financed from internal accruals. Half of this would be for existing verticals and the rest for new verticals such as lithium, steel, and paper recycling. You see, the company is now focusing on EV battery recycling business that will help it become a prominent supplier in the EV battery value chain. Battery recycling is still a nascent market in India and it may take up to 5 to 6 years. but that could be an opportunity for almost vertical growth for the early entrants. And Gravitas is working on a pilot project for lithium-ion batteries to become market ready. With a vast sourcing network and existing client relationships with prominent players in the battery segment, the company has an edge. Also, one of the requirements for EVs is to use lightweight components. As an aluminum recycler, the company caters to that need as well. It targets 50% of its products to be in value-added segment in 3 to 4 years from 43% as of now. The fixed asset turnover, that is sales to fixed asset ratio in the business, is 8 to 9 times. The company has been paying dividends for 12 years. The return ratios look strong with return on equity over 40% and return on capital employed over 31%. Debt to equity is comfortable at 0.6 times. The management's focus is to keep return on capital employed at a minimum of 25%. The stock is trading at a PE of 20 times against a 5-year median PE of 16 times. The second player on this list is Cabra Extrusion Technique. Cabra has emerged as an interesting small cap play in the EV value chain. It is a beneficiary of EV penetration, green growth, and domestic manufacturing push. Its conventional business is making plastic extrusion machinery, where it is a market leader with almost 30 to 40% market share. For this business, the company's clients include Astral, Supreme, Ashirwad, Finolex, etc. The conventional business stands to benefit from capex revival, that is, rise in affordable housing, construction, and water infrastructure. However, I'm more excited about Cabra's emergence as a player in the EV ecosystem in the recent years. With the launch of Batrix that contributed 26% of the revenue in FY22, it has become a key value chain player in the green energy storage and electric mobility space. The company targets to have 100% localization levels in battery management systems and other auto components. Its R&D team is working on battery packs for electric two-wheelers, three-wheelers, and four-wheelers along with electric bus. It plans to increase battery pack capacity from 1 lakh to 7 lakh by FY24 with investment of Rs 1 billion funded by internal accruals. It is focusing on battery packs across multiple chemistries with applications in electric two-wheelers and three-wheelers, LCVs, and swapping stations. The company has already captured 15% market share in the lithium-ion batteries in its segments. It is consistently increasing its partnerships with EV OEMs. The return on equity and capital for the company stand at 10% and 13% for FY22, which look a bit depressed due to lower scale of operations in the Batrix by FY22 and COVID. But in the trailing 12 months itself, the company has grown operating profit by 35%. The latest net debt to equity ratio is 0.2 times. The stock is trading at a PE of 46 times. Now the third in this list is graphite electrode manufacturer HEG. HEG has the world's largest single-site graphite electrode plant and it's a global player. Its products are used in electric arc furnace for steel production. Now that's its legacy business. I'm more interested in its new line of business. Through its subsidiary TACC or the Advanced Carbon Company, HEG is coming up with a facility to manufacture graphite anodes for lithium-ion cells with in-house tech expertise. Now these will cater to the batteries for electric vehicles and energy storage systems which are mainly being imported as of now. Under the first phase, which will be operational in FY26, it plans to invest Rs 1,000 crore to cater to a 10 gigawatt hour of cell manufacturing capacity and make 10,000 tons of anodes per annum, which is likely to take care of 20% of the domestic demand. Under phase 2, it plans to invest another 1,000 crores to cater to 20 gigawatt hour of cell capacity. The management expects it to be a vertical growth opportunity for the company. As of now, the company has return on equity and return on capital employed of 12% and 14%. It is trading at a PE of 8 times and price to book value of 1 time. So these were the three candidates that I wanted to draw your attention to. Now do note that today's discussion does not imply any view on the stock. But I do believe that these are the stocks that deserve to be on your watch list if the opportunity in the EV battery chain excites you. If you found today's video useful, do press the like button and share it. In any case, I would love to know your feedback in the comment section. For more such alerts in the investing space, subscribe to Equity Master YouTube channel. Thank you for watching. Goodbye.